Big mountain is there, and contrast to the little ones we have here in Florida. It's 8:43 now. Good morning.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
All that means it's time to check in on money and find out what you should be asking your financial advisor, like we do. Philip Statler from Statler Financial Services in downtown Sebring. Philip's on the phone this morning. Good morning, sir. How are you today?
Hey, doing well today, Dave. It is, it's halfway through the week, and, we look at this and look at the markets, and yesterday was just not a pretty day. And it looks to me like just maybe we're going to turn it around for today. But no real economic news coming out today, so nothing to really help us.
Yep, except for a bunch of earnings they can get excited about or depressed over, depending upon what you quantify what you're talking about. Yeah, it was an off day, not catastrophic, but it was definitely a down day. Dow fell by 0.2%, down 322 points. Standard & Poor's was off by 49.5. That's also 0.2%. NASDAQ down 0.8%, down 220. And the Russell 2000 was down a little over a full percent, which kind of tells me that the driving force on the thing was the concern over interest rates. And, we're looking at long-term bond yields now surfing a 20-year high, and that cannot look good for the mortgage market at all, can it?
No, it can't. And I know you didn't have the number, but I did find the number. It just popped up on my screen. So applications for mortgages to purchase a home dropped 4% last week.
What a shock! Saying mortgages up around 6+% again. Yeah,
like
6.5. Those 30-year bond. Yeah, those 30-year bond rates are sitting at a 20-year high. The rates that we track, let's see, off a little bit of my delayed quotes this morning, but still the 10-year is 4.647%. That's it. You start looking at numbers that high, and you're starting to make major economic effects to it. You'd mentioned yesterday that maybe one of the contributing factors, in addition to jitters over the economy, in addition to jitters over federal spending with our war going on with Iran, is even other countries are starting to look at us and saying, "Oh, wait a minute, maybe we ought not be buying as much of these guys," right?
That's right. When we talked yesterday about China, down to 18-year low on the number of treasuries, the amount they hold in treasuries, which, from a political standpoint may be okay, but from a financial standpoint, that's really going to hurt the United States.
Absolutely. And like I said, it seems to show by the more interest sensitive the index is, the more it went down yesterday off of the jitters over the rate. Price of oil, right now, I'm showing it as being still a little over 100, but at least declining, going in the right direction. So those two things that tend to cause panic are both not necessarily on the side of the break point we want them to be on. Gets us we've got to mention that the big economic event for today is going to be the big earnings event for the day. $5 trillion NVIDIA reports at the end of the day. And it's one of those rare times. We used to have Apple as being the company that put everything on hold. Now it's NVIDIA but an earnings report becomes a full economic event, doesn't it?
It does. And, in terms of NVIDIA, it happens to have gotten to that height now where all eyes are focused on it, and it does become a market mover.
Absolutely. We were chattering before we went on the air that my guesstimate is it's going to be a pretty good report. Now, whether or not it's going to beat the expectations of the market, which are always over what the fact set people say, but after going through the rest of the Magnificent Seven earlier in earnings season, they all got dinged for spending too much on CapEx. And the capital expenditures they're getting dinged for is the stuff NVIDIA makes. So I got to assume the expectations are sky high for the big artificial intelligence chip maker.
Yeah, I think so. I think obviously there's a big a big expectation that it's going to do well. And so far, I mean, it doesn't usually disappoint.
Not normally. They always seem to hit it out of the park and then getting it into the next block over from the ballpark. Other tidbits this morning before we get to some household names that actually reported. We're going to talk about betting on the direction of the market and all of that. The Chicago Mercantile Exchange even has a tool that gives you the odds of how much, which direction the interest rates are going to go. The poly market people are now debuting prediction markets tied to private companies. If you don't want to buy the stock, well, what the heck? You can bet on what they're going to do now. The people that dismiss stock trading as being gambling, well, what the heck? You can make it real gambling now.
Let's just gamble on it for sure, huh?
Yeah, what the heck? Might as well make it a real bet.
Hey, I got another tip. I just
Yeah.
want to give you this tidbit that came across my ticker today. Talking about, trying to decide whether to go to college or trade school. Article talking about how the skilled labor market, skilled trades, electrical, plumbing, those type of guys have seen a 30% bump in their wages over the past few years, which, for somebody that goes to trade schools at college, they're way ahead of the earnings curve compared to a college graduate right now, and especially depending upon the degree you come out with. Yeah, I think more students need to be looking at that from an economic standpoint, and really start looking at the trades, because it seems that really that you can get well ahead of your college buddies by going into a trade.
And the smart money for a long time has been saying, doggone it all, a 4-year degree, we had it placed in our minds for a few years in there as being the only way to end up earning a good living once you got out of school. That's almost turning on its head these days, as social sciences majors are having trouble finding a job anywhere close to their chosen field with 4-year degrees. But, I mean, you do an apprenticeship for an electrician after going to trade school, and you got a job almost immediately.
Yeah, exactly. So, I mean, I think I don't think enough students really take that into consideration when they really start looking at what are they going to do for a living.
Absolutely. Speaking of good jobs, maybe a job at Target doesn't sound so bad anymore. Based on their quarter, sounds like Target did okay this time around, didn't they?
Target did well, Dave. They beat on earnings per share. It came in at $1.71 versus $1.46. Revenue was not quite $1 billion more, but getting close to it than expected. A number that hit me was the same store sales numbers. Same store sales rose 5.6% this last quarter. Folks, that's the first increase they've seen in that metric in 5 quarters. So a year
Wow.
and 3 months it's been since they've seen that kind of rise in that. And I wish I could say that was really helping the stock today, but it does not seem to be. They were up earlier this morning about 2%, but it seems like there must be some profit taking in that stock right now, because they're down almost, getting close to 6%.
Holy crud. I would expect a little bit of off just in terms of downside pressure from the brick and mortar sector, but 6% is, I won't say catastrophic, but definitely measurable, isn't it?
It is based on the earnings report that came out.
Yeah, I don't get it. Any other indications you got out there this morning?
The other day we had Home Depot. Today we got Lowe's. Yep. Lowe's beat slightly on their estimates for earnings and revenue for the first quarter. They did reaffirm their full year guidance, but kind of like Home Depot the other day, they were trailing down. Lowe's trailing down today almost 2%.
I kind of get the feeling that even when they put out good guidance, the conventional wisdom says my bull crud detector is going off, and they're dissing a lot of these guys, aren't they?
Well, they are, and they're putting little things in there like they acknowledge challenging macro housing market issues. So, it's not like all Pollyanna and everybody's excited and happy about what's happening in the marketplace. So,
challenging macroeconomic housing. Does a
Yeah.
government employee write those things?
I don't know, man. Hey, I got another one though for you. Toll Brothers, the home builder,
Yeah,
they also beat on earnings and beat on revenue. And they are trading up this morning about 2.75%.
that's good news, especially given the housing news we keep getting.
It
Resetting the
is.
table, it was sell. It was a sell-off would be wrong term, but it was definitely a negative day on Wall Street yesterday. Without a lot of news coming out of the Iran situation for the moment, interest rates not where we want them to be by any measure, and an oil at least trending down a little bit. 45 minutes before we open, what are we looking at today?
Hey, we got some green ink this morning. It looks like to start off the day. The Dow is up almost a half a point right now, as well as the S&P 500. Nasdaq's up 0.8%. The Russell 2000's up almost 0.7%. So it looks like it'll be a green start on the indexes for the day. On the other side, though, we're seeing red ink across the board. Silver down about 2.1%. Gold's down 1.25%, and crude oil down almost 2.7%. You got to like this number, Dave, compared to yesterday. 101.58 a barrel right now.
Did you ever think you'd see $101 barrel in oil and say good?
Yeah, I'm still not saying good. I'm still not saying good. I saw the gas is still at 259. I mean 359, and so I'm sorry. I think it's 459. I'll get it right here in a minute. It's so high, I've lost track.
Yeah, I'm stretching out on fumes, hoping to see a decrease. It's kind of one of those periods in life. Looking at the overseas markets, as usual, the Asian Rim follows our yesterday, and the Europeans follow our futures. The Asian Rim is almost universally down, not catastrophically. Mainland Chinese markets off by, on average, about 0.1%. Japanese markets were down a little over 1% at the close at 6 a.m. Over on the European side of the fence, though, they're looking at our futures and saying, okay, they're okay over there. Average European market is up by a little over 0.5% halfway through their trading day. Getting my retirement together takes a plan. I need a plan. How do I find you to try to formulate one, Philip?
David, give us a call at 863-382-0037 to schedule a core retirement design. That's you and I spending some time on the phone determining where you are, where you need to be, and if we can help you get there from that standpoint. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
And online at newstalk730am.com as well. Thank you very much, sir. We'll catch you tomorrow and hope for some good news to start the morning out. Fair enough?
All right, buddy. Take care.
Take care. It's 105.7 Light FM and Statler Financial Services, Philip Statler.
Hey, folks, I want to thank you for joining us today. I hope your day goes well. Look forward to speaking to you again tomorrow. Take care. Bye now.